Like, subscribe, share. It does help the algorithm in the channel, and it is much appreciated. 100% says borrowing through DWP, interest rate, LTV, terms, ranges. So we have a couple of different providers that we work with over there, Digital Wealth Partners. We have Maple, we have Arch Lending, we have Galaxy, and then hopefully a prime broker in the near future. You might imagine who that might be. I'll talk about, somebody that had on my podcast toward the end of this. But when it comes to interest rates, LTV, and terms, it just depends on the asset. It's a wide range. So if it's Bitcoin, it's going to be a lower interest rate just because there's more liquidity in that. And it's, blue chip, according to a lot of people, they underwrite the risk lower. So they're willing to give you close to 70-80% LTV on your Bitcoin, especially right now in the bottom of the market, or what they think is the bottom of the market. People tend to be a little bit more aggressive on the LTV that they're willing to give. Interest rates, Bitcoin, again, depending on the amount of Bitcoin, I've seen as low as 7.5% or 8%. I've seen people cross-collateralize their Bitcoin or their ETH or their Solana or their XRP for a mortgage. That's a big deal that just happened here recently with Fannie Mae and Freddie Mac, allowing for in-kind transfers for down payments of crypto to be able to purchase properties. Awesome. You can also cross-collateralize the property with your crypto in order to be able to get a loan if you want to do it that way. It's double leverage. I'm not saying it's the best thing. I'm not saying you should do it. I'm just saying it's an opportunity that's out there, and you should do your own research and make your own decisions. Maybe speak with a financial advisor or a professional before you make that call. So back to the interest rates. On XRP, all the way up to 15% can be lower depending on the amount that you're putting up. LTV on XRP is going to be somewhere between 40 and 60%. Depends on the lender. Ranges tend to be shorter term. It's not going to be multi-year lending on these things. The longest loans that I've seen on crypto are 24 months, 2 years, kind of at a maximum. Most of them are 1 year or less. Tend to be, 3 to 6 months a lot of the time, because they're looking to turn that capital, and it's hard money lending, basically. Private credit, some of the stuff that we're seeing having a lot of problems right now, lending against crypto or other collateral. So that's what we're currently at. I think that that's going to change in the near future. I think by the end of 2026, we will be very close to prime. Hopefully we see lower interest rates from the Fed toward the end of the